The following podcast was recorded on Tuesday, October 30th, 2025, featuring Jim Bianco of Bianco Research. To hear the podcast in real time, you can sign up for a free trial at biancoresearch.com or arborresearch.com or by emailing Gus Handler directly at gus.handler@arborresearch.com. You can also call Arbor Research and Trading at 1-800-606-1872. Thanks for your time and enjoy the podcast. Welcome everyone to Talking Data. I'm your host, Kristen Radosh with Arbor Research and Trading, joined today by Jim Bianco of Bianco Research. Welcome, Jim.
Thanks for having me.
Today, Jim discusses AI's impact on the markets and the economy. Jim, has AI produced a record concentration in stocks?
Yeah, so let's start right there with the first chart and talk about what its impact has been on investments, in particular the stock market. This comes from JP Morgan, Michael Kemblis, their strategist over there to be specific. As it says at the top, they looked at, analyzed earnings transcripts, and they talked to their equity research team, and they compiled a list of what they call 41 AI-related stocks within the S&P 500. 29 AI Direct, you see all the Mag 7 to lead that list. AI utilities, these are the utilities that are powering AI, and then the equipment makers on the bottom of the list. 41 out of 500 companies. So if we go to the next slide, this shows you that those 41 companies, which is only 8% of the names in the S&P 500, as of yesterday was 48% of the capitalization of the S&P, or the other 459 companies is 52% of the capitalization. Effectively, half your investment is in these names. Now, is it unusual to have 40 odd names be half the S&P? No, that's kind of standard course anytime throughout history. If you looked at the top 40 names by size and you said how much did they make up of the index, it's usually around half or a little bit more. But they're usually all different themes, different industries, unrelated businesses. So they are a diversified group that make up that big concentration. This is one theme. This is AI that makes this up. That's what makes this unique. And what has been their impact on the stock market? If we go to the next chart, that little vertical line on the left is the start date. November 29th, 2022. That is when AI became, ChatGPT became aware. That's a reference to Terminator 2, when Skynet became aware. And since that date, November 29th, 2022, through this October 29th, the day before we're recording, those 41 companies in blue accounted for 74% of the gains in the stock market. The other 459 companies accounted for 26% of the gains in the stock market. Truly astounding that this one theme is 3/4 of the gains that you've gotten in the stock market since the end of 22. And if we go to the final chart in this section, this is just looking at their gains in total. The AI-related companies in orange are up 200% since the invention of ChatGPT, whereas the other 459 companies are up 27%. Or in annualized terms, the AI companies are running at 44%, 45% annualized rate, and the rest of the stock market's running at an 8.6% annualized rate. There's no accepted, this is the number for concentration. And what is that number? Like the S&P, it's at an all-time high because here's the closing number and it's the highest it's ever been. All you could do to show that the stock market has a concentration issue is highlight a number of statistics like we just did. I would argue, in looking at the data that we have that goes back to 1926 in some cases, that to have half the stock market to be tied up in one theme, for it to account for 3/4 of the gains over the last 3 years or so, and it's only 8% of the names, is a record level of concentration. Restated, if you buy a broad-based stock index like the S&P 500 ETF or something, half your investment is now tied into AI.
What's the impact of AI on the economy?
It's been profound. So if we go to the next chart, the impact has been on data centers. And I'm highlighting here Meta's data center that they're building in Richland Parish, which is outside of New Orleans. The top half of the image is what it'll look like when it's done in the year 2030. The bottom half of the image is the island of Manhattan. And the pink part of that is how big that data center is going to be. And if you notice up at the top of that bottom half is Central Park. That, by the way, is a 6-mile run to go all the way around Central Park, and it's 1/4 the size of this data center. How big, how expansive is this going to be? Blue Owl, the private credit firm, has been the lead on $27 billion of financing just to build this campus. That's just to build the campus. Now, to put all the hardware inside the building, the NVIDIA chips and everything else, they're estimating that that'll be 3x to 5x the price of the campus. So that could be anywhere from $75 billion to $125 billion. Truly astounding numbers. And all of these AI companies or these data centers require enormous power needs. So much so that this campus that they're building in Richmond Parish will consume more power than the city of New Orleans. And so it will be the biggest power user in the entire state of Louisiana. And if you go to the next chart, this is now becoming the big political issue. I'm hearing this everywhere. So the orange line in this chart shows you the CPI, the rise of consumer prices. I indexed it to January of 2021. Prices are up 23% in average. Electricity, residential electricity prices are almost double that. They're up 41%. And people are starting to realize that their electricity bills are going up. And the reason that their electricity bills are going up is because of these enormous power needs that these companies have for their data centers. The other thing to keep in mind is the enormous cost, $100 billion in 5 years just for this one data center. There's another one in south of Memphis that XAI, that's Twitter X's Grok's data center. That one is just a little bit smaller than this one. And it is pushing about $80 to $100 billion for a final price tag. And those aren't even the largest. The largest is what's going to be called Stargate. That's going to be a $500 billion project, but that's going to be interconnected, spread out over 10 campuses across the country. They hope to have that up by the early 2030s as well. How important is this? These companies, AI, is accounted for 1% of GDP growth in the first half of 2025. Now that's something considering that GDP growth has been 1.2% overall. It is the majority, almost 90% of economic growth in the United States in the first half of this year has come from AI-related production, building these sites, powering these sites, financing these sites. It's been truly astounding. So they have had a tremendous impact on the economy. What's going to happen next is now we're going to get the political fallout. This electricity chart we see there, this is going to be the fallout. Everybody loves ChatGPT. Everybody loves AI because no one pays for it until you get your electricity bill. And then you say, wait a minute, I am paying for this and I don't want to pay for this. And so there's going to be a big, big pushback. Now, the problem they're going to face is what the XAI plant has south of Memphis. They brought in gas turbines to power their plant. So right next to it, they've got a bunch of gas turbines. They generate their own electricity, all fine and dandy. They got an exemption from environmental rules to put those gas turbines in that area. And now it's being reported that the incidence of asthma in and around the South Memphis area is going up. Now, the causation is still open, but you put in a bunch of gas turbines and they pollute a little bit and you got an environmental exemption And now people are going to the doctor saying they got asthma. This is not good PR for the AI industry as we move forward, and they're going to have to kind of work through this. But it is a dominant force, not only for the markets with the concentration, but also the economy.
So Jim, what is the end game?
So the end game, I think we're going to use the roadmap of the internet expansion in 1999 and into the early 2000s. So let's go to the first chart here, and let's talk about that roadmap. First, there's a valuation problem with the market. Here's Wall Street's favorite metric for valuation, the forward PE ratio. What does Wall Street think earnings are going to be in the next year divided by the S&P's price? That's 25.53 as of the beginning of this week. There's only been 2 times in the last 30 years it's been higher than this. Both were major peaks in the market. One was in 2021, right before inflation flared up and the Fed started hiking rates. And the other one was the tech bubble in 1999. So we've got a valuation issue with the market. But interestingly, this valuation issue in the market is not necessarily a byproduct of AI, not necessarily, because if we go to the next slide, the blue line on this slide here shows you the same S&P 500 forward earnings that I showed you before. And now I show you the Bloomberg 500 X the Magnificent Seven. They're the bulk of these 41 companies. And then the green line is the average in the standard deviation. They are also very rich as well too. So it's not just the AI stocks are on the moon, it's that the non-AI stocks are very rich. But interestingly, the AI stocks by transitory property here are a little bit over their average, but not necessarily a lot. So what is it that's going on here with these AI stocks? It's not that they are all intensely overvalued. Maybe Palantir is an exception to that rule because it does trade at about a 200 PE. Instead, they all are rich. The market is pricing all of them as if they are all going to win. We saw this in 99 and 2000 when we had the internet build out. We had the Ciscos, the JDS Uniphases, the Global Crossings. These were the routers, the switches, the fiber optics to power the internet. We not only priced all of them to win, we priced any company that put .com in its name as a winner. And that's how you get to these extreme valuations, is that it's everybody's going to win. But what we learned from the late 2000s was everybody isn't going to win. Now, some of the players in the AI space understand this. Famously, Sam Altman of OpenAI, ChatGPT, came out in an interview, I think with Tucker Carlson a couple of weeks ago, and said, AI is in a bubble, and AI is going to correct, and it's going to correct really hard. And I'm paraphrasing in my words, but not my company, not my data center. They're all going to be among the winners. You, good luck to you, but not me. And everybody's saying that. Yes, it's a bubble, it's going to blow up, but not me. You're in trouble, not me. And that's usually not the way it's going to work. We don't know. I don't know who's going to be the winner in all of this. I don't think Sam Altman knows who's going to be the winner, but there's not enough room for everybody. How did we get to such a massive overbuild of data centers? Because if everybody's priced as a winner, every individual deal, whether it's the Meta deal in Louisiana or the XAI Grok deal in south of Memphis, or it's Stargate, individually, if you do the math on those deals, they work. But collectively, we get this massive overbuild. And that's what we wound up doing in the late 1990s, early 2000s. We had a massive overbuild of the internet. So if you go to the final chart, this is the NASDAQ. It peaked in March of 2000 at 5,000. By October of 2002, it was down at 1,400. It had corrected 77%. And the reason it did is we had this massive overbuild. But I'll quote another name, Jeff Bezos. was talking about the AI overbuild. And he said, this might be good for society because as investors overdo it and overbuild, when the infrastructure sell-off, and that's 2000, 2002 in the internet comes, that we were left with the internet. When the infrastructure sell-off comes with AI this time around, led by NVIDIA, the first $5 trillion company, we'll be left with AI. What happened after that? Market bounced around at the bottom, and then starting around after the financial crisis, 2009, these stocks started to take off, and eventually by 2015, it made a new all-time high. That took 15 years. I'm not saying this one will take 15 years, but what was that next leg up? You had an infrastructure build. You blew up everybody that overbuilt infrastructure, but you left us with the internet. Then the question was, what do we do with this thing called the internet? And then we had a whole bunch of content companies come on board. Meta, which was Facebook at the time, Alphabet, which was Google at the time, and eventually companies like Airbnb and Uber and the like, companies that said, now that we have the internet, here's a business model and here's what we can do with it. So we are in the infrastructure stage like the late 90s. We have the sell-off, and then we have the lift-off of that infrastructure bust out with the AI content companies. You left us with AI, and I ask it silly questions, and it gives me interesting answers. What do I really do with this from a business standpoint? Companies will be made that will leverage that, and then they will have the rally of the content companies. Now, two problems. One, these companies don't exist yet, these content companies. The joke that's going around is the people that are going to make these content companies that are going to leverage AI and become the future billionaires are in 7th grade gym class right now. So we got to wait for them to graduate from college, and then they'll make these companies and they'll go. The other problem is those that are trying to make the companies today are running into a big roadblock. And I'll give you one anecdote. I know somebody who's trying a startup in AI, and his goal is he wants AI to be able to talk to every app on your phone. So you can pick up AI, hit the little microphone and say to your phone, order me my favorite drink from Starbucks, the nearby Starbucks, change the background color of my phone to blue. When was the last time the S&P was down 2% in a day? Put me a calendar notice, I'm getting my hair cut Friday at 3 o'clock. Call my wife, tell her that, or send my wife a text, tell her I'll be home at 6 o'clock, and some other question. And what it is that all of these things are all different apps. And the whole idea is AI will do all of these instantly. It'll give you the answers and send that text and update your calendar and make that order all instantly, simultaneously. What's the holdback? In order to have that done, he needs to interface with all of the Apple products and the Apple iOS on your phone, and the Google products and the Google iOS and the Meta products and the Meta suite of products like Instagram and Facebook and stuff. But none of them want that to happen because they all want to do exactly what he's doing, and they all want you to use their ecosphere, not everybody else's ecosphere. And he's trying to be ecosphere neutral. So they're blocking everybody from leveraging it up. That's the whole point. AI is supposed, why I'm so bullish on AI, if I haven't said it in this podcast, I'm very bullish on the prospects of AI. Because what is it at the end of the day? It's to make using a computer ridiculously easy. Just ask it what you want, tell it what you want, and it will figure it out and give it to you. Today, the problem with computers, and if you've ever checked in at an airport, you've probably seen this, we're all a bunch of database operators. You know, we got to put in, what's your name, what's your address, what's your phone number, click on all these questions, give me a password, give me a username, and then it fails and you got to do it again, and then you got to answer all these questions to get one of these things done over and over again. And then even if you save it, your password gets lost and you got to redo it, and it's hard, and you got to do them one at a time, and it's time consuming. And so what AI will do is it will do all this. You will just tell it what you want. My favorite drink from the nearby Starbucks. Figure out what my favorite drink is, figure out where the nearby Starbucks is, and just get it done. And that's the promise, and that's what we're hoping for. But we still are in the build-out phase. And the companies like the Metas and the Googles and the Apples don't want to let go of the control of their apps in their ecosphere to some third party that would tie all this together. They want to do it and force you to use their ecosphere and compete with each other. So we will have this infrastructure build, we will have the infrastructure correction, and then we will eventually have the content rally that comes after it. Whether it's 9 years later or it's 3 years later is an open question. The reason it was 9 years later with the NASDAQ after the internet was we had the financial crisis, which was somewhat unrelated to it, that kind of stalled it off. Maybe we have some kind of superseding event in there that delays the time, or maybe the content part of it comes really quickly. But right now, you've got record concentration. We are all tied up with the internet or the AI theme itself, whether we like it or not. The joke I heard was that as an equity investor, you've got two options. Either you buy like a S&P 500 index fund, you're up 17% this year, you've been up 20% the last 2 years. Congratulations, half your investment is tied in AI. So whether you want it or not, your retirement is riding on whether or not this infrastructure build works out. If you don't like that, you can invest in stocks away from the AI boom, and you've horribly underperformed. These are not good options for anybody right now. But this is where we are in the cycle. Is it a bubble? Yeah, I'd say it probably is a bubble, but it's a bubble of optimism, not a valuation. What do I mean by optimism? The problem isn't that these companies are at ridiculous valuations. Maybe we get there. Palantir might be there right now. It's that we price everybody that's in the space to win. And not everybody will win in this space. There will be winners and losers. There always is. And then we'll have to separate those out. And that's why you get this immense concentration in these companies. And then we will have the content play after that, especially if these companies just kind of ease up and let everybody start to tie in to all of their ecospheres and let people work cross-platform, but we're not there yet. So all AI is for the moment is a super duper on steroids Google search, which is very useful, but limiting. We need it to be something more than that. We need it to help solve problems. We need it to answer questions. We need it to make our life easier. It can, it will take some time, but right now we're getting ourselves a little bit too giddy with the infrastructure build out. It reminds you of, like I said, Cisco, JDSU, WorldCom, is what you look at when you see the NVIDIA, which is the chip supplier, and then the capital companies like the Johnson Controls, and then you see all of the energy companies like the Constellations. There's kind of a parallel in there, but they're not making the what do I do with AI products yet. They're just building it out. Just like that's what Cisco and JDS and WorldCom were doing, was just building out the internet. The what do I do with it will be the next leg. We don't know when that's going to start. We don't know how it's going to start because these products constantly evolve. But it is the dominant theme. And we also have to be careful about the pushback. Everybody loves AI. Everybody loves all the funny memes until they look at their electricity bill and they're starting to put 2 and 2 together. And whether or not those people in Memphis are getting asthma because of the gas turbines, maybe they're not. But right now, at a minimum, it's a bad PR problem, and at worst, it's a health problem. And so the industry is going to have to work through those kind of issues as well, too.
Jim, thank you for your thoughts today, and thank you everyone for joining us. If you have any questions on Arbor Research, Bianco Research, or Arbor Data Science, you can contact us by emailing Gus Handler at gus.handler@arborresearch.com. Thanks again, and have a great day.